In this video, traders, we look at should you avoid leverage when you trade? Stay tuned. Hey guys, warm welcome to you. So this is an interesting one. Should you avoid using any leverage at all when you trade? Now, I've got a view on this which pretty much, I guess, is the same as everybody's, and there's also a practicality to this as well. So my view is that, okay, if you are trading and you've got a long-term viewpoint on things, then if you can and you have the capital, then no, don't use any leverage, because leverage just adds an extra pressure that you don't need. However, if you're trading, then you kind of got the situation where we really do need leverage. Now, this is where I view capital differently to a lot of people. A lot of people will say, okay, I'm looking for X% return, and that's fine because that's generally the benchmark used across, all kind of growth, whether you're talking about business, whether you're talking about hedge funds to day traders. But I prefer to look at capital as a tool, and that's why leverage becomes so important, because you're using it as a tool as opposed to using it as a way to gain capital. So in other words, when I'm trading, I'm not thinking, oh, well, I'm a genius because I've made X 100%. I'm thinking, well, I've got a risk of loss, significant loss of this capital, and I'm using it as a tool because I believe I've got the skill set to turn that into more capital. And there's a certain point where, obviously psychology sets in, you get to a certain level and you have to scale back, or there's certain opportunities. It's not always, you can't always just use the tool and keep leveraging and leveraging. Of course, it just doesn't work like that. As you know, guys, you've got to kind of scale up into things, opportunities there you take advantage of. You have some drawdown, you chug along a little bit, you make a little bit more, and the growth is a lot more staccato than it is linear and smooth. And so, thinking of capital as a tool, you have to use leverage. Otherwise, you're just not going to get the returns that you want. But the important thing is, if you're trading and you're saying, okay, well, I've got a decent sized pot and I want to make kind of 10%, 20% per annum, you don't necessarily need leverage then to do that, because you can find a few stocks, a few investments, tuck them away using cash, and then trade, and then you could make trading out of those if you wanted to, but you could pick them well and had a few kind of well-timed deals there, then you would make your target quite easily. Now, that's fine if you've got a significant amount of money in the first place and it's meaningful to you. If a lot of new traders, you have got a small pot, then 10% is not going to cut it. It's not worth you doing. If you've got a 10 grand pot, say, 5 grand pot, and you're aiming for 10% a year, what's the point in doing it? Unless, let's just put this out there, of course, if it's a learning process and you're learning and you plan to kind of put more capital in later or do something else with it, that's fine. But if you're spending all those hours a day chugging away to make 500 quid on your 5,000 at the end of the year, I think you'll agree with me, it's not worth it. Like I say, unless you're going through a learning curve and you plan to kind of put some more money in at some point. But don't forget, if you're learning to make 10%, you've got to change your strategy at some point. This is where there's a little confusion comes in, and where this kind of question is quite good, because at some point you're gonna have to go a little bit more aggressive. You can make 10% a year on your 5 grand, and yeah, okay, double your money in 10 years. Is it worth it? Probably not. I would hazard a guess for most of us out there. You're gonna have to either have some more pot from somewhere else, and you're going to have to trust that you can do the same thing with 500 grand and make yourself 50k a year, or you're going to have to say, well, 10% doesn't cut it for me. I want to risk more of that 5, use the leverage, maybe have it appear like it's 500, and then make 10% on the leveraged amount. Then I can look like I've made 50k. Make it look like I've made maybe 5 to 500 is a bit big. 5 to 50 is probably more like it, but you get the point. We're scaling up and saying, okay, well, now I'm making 10% on for 50k because I've leveraged it up by 10 times, and yes, I've got the risk of loss of that 5, but now if I make 10% on that, I've doubled my money every year. Now we're starting to get in the realms of what's worth doing, and then we might go a little bit more aggressive. We start trebling our money, doubling our money. Of course, the drawdowns are going to be huge as well, but that's the decision we really make as traders. So it's quite a commercial decision as well, should you avoid leverage or not. The point is, are you prepared to risk all the capital? If you're not, then don't use any leverage whatsoever, and make sure you're not in risky investments. Then you probably won't risk all your capital, because you'll be able to, in safe things. Like if you put all your capital into the Dow Jones, the chance of that going to zero are almost non-existent. So you're not going to lose all your capital. But if you want to have a little bit more risk, then really you have to trade more leverage, because you're just in a position where your capital's not enough to provide. It's not going to work hard enough for you without ramping it, amplifying it up to make it worth your while. Unless, okay, as like I say, and I repeat myself, because we're talking about learning the ropes here. We're talking about doing it properly, so to speak. You have to use leverage, because your account size isn't going to grow at a rate that's worth you putting the time in if you don't. And if you don't want to, then of course you might not want to put the hours in. You might just want to tuck it away somewhere and do something else with it. So to me, you've got to, unless you have a very, very substantial account that you want to kind of risk. But even then, you're sitting there with 700, 800 grand account. You might still want to say, well, you know what? Let me siphon off 80 of that. Let me stick some rest of that in a kind of, more lower risk, chugging kind of stuff, diversify a little bit with that, and then go a little bit more aggressive and use the leverage with the smaller amount. Turn that 80 grand into 800 and see if I can make a kind of 10% a year, 20% a year on the 800, meaning I've doubled, trebled my 80k that I've had at risk. But of course I'm risking a lot per trade. So it's a commercial decision to make, guys. I think that if you can, then don't. But most people have to, and so you're going to have to. And of course, the obvious thing is don't use too much, because if you use too much, you really are kind of turning the screw in terms of emotional sensitivity. That's the biggest thing. Opening up that leverage tap means that you've got emotional sensitivity. Big swings or relatively small swings equals big swings in your P&L, which means you're more emotional attached to it. You see your P&L disappear by 10% in a day because you're leveraged up. 10 days you're wiped out, and that is tricky for some people. So there you go, guys. That's my thoughts on should you avoid leverage when you trade. No, I think it's crucial. I think you should do it, but use it sensibly in the way it's supposed to be used. Take care, whatever you're doing. Bye bye.